Hello, today we're going to talk to you about Iberiabank, a commercial bank located in the southern United States. Our analyst team consists of Haiying Wu, Renhua Liu, David Delahunt, Caitlin Ryan, and Hannah Roman. Here is our agenda. We will first explain our valuation model of Iberiabank. Then we'll talk more about Iberiabank, its peers, its stockholders, and its management team, followed by our predictions for Iberiabank's future performance. We use many external and internal economic, industrial, and financial assumptions while building this report and our forecast model. Our external assumptions included those for the unemployment rate, which we assumed a 2% per quarter declining rate, GDP, which we assumed a 0.5% increase quarterly, and the housing market index, which shows the demand for new homes based on an index of over 300 home builders, which we assumed would grow by 1% per quarter. Lastly, we used disposable income and assumed a 0.5% increase per quarter. Our internal assumptions included the growth of Iberiabank's branches, which we assumed would grow by 4% each quarter. This growth percentage is a conservative estimate of branch growth based on historical branch growth prior to 2008. We also estimated the growth rates of Iberiabank's business, real estate, and home equity loans based on historical growth data. The other loan types were not nearly as correlated to its revenue as these three types of loans.
We determined our 12-month target price of $61 by using a blend of two relative valuation models, price to earnings per share and price to book value, as well as one fundamental valuation model, discounted cash flow. The DCF model is used to calculate the present value of the company's future cash flows. Instead of using free cash flows, we use total net cash flows expected to occur over the life of the company. This method gave us a target price of $63.14. The price to earnings method is one of the most widely used valuation methods because it relates directly to earnings. This method gave us a target price of $73.05. Price to book value is a common ratio used for banks because of banks' constantly changing levels of debt and cash. This method gave us a target price of $48.07. Iberiabank Corporation started as Iberia Building Association in New Iberia, Louisiana in 1887. After 113 years of operation and expansion, it became Iberiabank Corporation in 2000. Iberiabank Corporation provides commercial and retail banking products and services in the southern United States. The corporation has 6 subsidiaries, including Iberiabank, Iberia Asset Management, Iberia Capital Partners, LLC, Lenders Title Company, IB Aircraft Holdings, LLC, and Iberia CDE, LLC. Iberiabank Corporation's peers consist of regional and super-regional banks that operate in the South. These peers include Hancock Holding Company, Regions Financial Corporation, Bancorp South, Trustmark Corporation, and Mid-South Bancorp. Iberiabank has a high tangible book value compared to its peers, showing the corporation is stable and the stock is not undervalued. Iberiabank also has a high efficiency ratio, above the peer median, indicating the bank is efficiently managed. However, it has a low net interest margin, which means Iberiabank is losing potential interest income. Iberiabank had 23 insider shareholders as of February 22, 2012. The table lists the top 5 insiders who own stock in Iberiabank. From 2011 to 2012, the percentage of shares held by inside shareholders stayed relatively constant, showing that most insiders remain confident in Iberiabank's future prospects.
Iberiabank's holding company has a strong and professional management team and board of directors that has led to its success over the past decades. Iberiabank's management team has taken an active role in strengthening and expanding its business with a focus on customers' needs. Iberiabank aligns management incentives with shareholder interests through annual incentives including equity-based awards and long-term incentives, such as stock options. These types of awards make up 67% of Iberiabank's compensation mix. The company has a performance-based compensation pay structure for its executive officers, which motivates its management team to achieve and maintain its best practice. Conservative strategies and practices help maintain a stable credit quality in an unstable economy. Iberiabank's asset mix and operating strategies reflect its conservative corporate culture. The company assets are distributed throughout the Southeast, which lowers the risk of economic downturn or unusual events in a specific geographic area. In addition to its conservative portfolio, the bank's practices help consumers feel secure when banking with Iberiabank. Conservative practices also protect the company from financial risks, such as changes in interest rates, housing markets, and consumer confidence.
Iberiabank may not be as acquisitive in future years as it has been in recent years. Iberiabank's well-capitalized status and access to the capital markets afforded it a unique opportunity to take advantage of market disruption created by the economic downturn, specifically FDIC-assisted acquisitions. Many of these FDIC-assisted acquisitions created a bargain purchase gain, meaning the fair value adjusted assets were greater than the fair value of liabilities assumed. As seen in the graph shown, each jump in Iberiabank's revenue growth since 2004 can be linked to an acquisition. In fact, acquisitions have accounted for 71% of the bank's asset growth since 1995. However, as you can see in the graph, the economy, measured by the U.S. real GDP, is improving in 2012. Banks are becoming healthier, which should lead to higher merger and acquisition pricing and a more competitive M&A environment, making it more difficult for Iberiabank to acquire banks for a reasonable price. Therefore, while Iberiabank may continue to look for acquisition opportunities, it most likely will not continue its pattern of failed bank acquisitions. In 2004, Iberiabank had 42 branch offices. By 2012, it has grown to include 172 offices. Many of these new branches were gained through acquisitions. These new branch expansions provide growth potential and the chance to gain additional market share. The most important step for Iberiabank is to show that it can integrate recent acquisitions and increase organic growth through improving management teams, optimizing loan portfolios, and refining customer service in the newly integrated branches.
On March 20, 2012, Iberiabank announced its most recent acquisition, Florida Gulf Bancorp, Inc. Florida Gulf has 8 commercial bank branch offices in Fort Myers, Florida, and $350 million in assets. Iberiabank offered 1.4 times Florida Gulf's tangible book value in the deal. Iberiabank paid this premium for Florida Gulf because it has more stable credit quality than most of its Florida peers, with non-performing assets totaling only 4.68% of its assets. In conclusion, our team believes Iberiabank's stock price will be $61 on March 28, 2013. Therefore, we awarded Iberiabank stock a market perform rating for the coming year. Thank you for your time, and we hope you enjoyed our presentation.